Good day, ladies and gentlemen. I'm Harpreet Kapoor, moderator of this call. Thank you for standing by and welcome to Nucleus Software quarterly earnings conference call for the quarter and 9 months ended on 31st December 2021. For the duration of the presentation, all participants' lines will be in listen-only mode. We will open the floor for Q&A post the presentation. So I would like to now hand over the proceedings to Ms. Swati Ahuja. Over to you, Swati.
Thanks, Harpreet. Good afternoon, everyone. This is Swati from Investor Relations team at Nucleus Software. A very warm welcome to all of you for this Nucleus Software earnings conference call for the third quarter and 9 months ended on December 31st, 2021. For discussion, we have here from the management team, Mr. Vishnu R. Dusad, our Managing Director, Mr. Parag Bhise, CEO, Mr. Ronan Mantri, CFO and Executive Director, Ms. Ritika Dusad, Executive Director and Chief Innovation Officer, Mr. Brajesh Khandelwal, Vice President, Neo Business, Mr. Ashwani Arora, Senior Vice President, Global Customer Success Team, Mr. Sanjeev Kulshrestha, Senior Vice President, Product Build, Ms. Prema Rajaraman, Chief People Officer, Mr. Tapan Jaiswal, colleague from the finance team. As you all are aware, Nucleus Software does not provide any specific revenue earning guidance. Anything which is said during this call which may reflect our outlook for the future or which may be construed as a forward-looking statement must be reviewed in conjunction with the risk that the company faces. An audio and transcript of this call will be shortly available on the investor section of our website, www.nucleussoftware.com. With this, we are now ready to begin with the opening comments on the performance of the company for the third quarter and 9 months ended on December 31st, 2021 from the MD. And post that, we would be available for the Q&A session. With this, I now pass it over to Vishnu, sir. Over to you, sir.
Thanks, Swati. Thanks a lot, Swati, and a warm welcome to all of you for this investor call ending third quarter 2022, financial year 2022. This is one of those unique years when, despite the huge turbulences in the environment, we have taken some of the strongest and boldest steps to continue building the strength of all our stakeholders. We have continued to innovate for our customers, coming out with brilliant 6-monthly releases full of ultra-flexible and ultra-rich functionality. Opportunities for all the nucleides to continue growing to the best of their abilities have been further enhanced during this year. And likewise, for our shareholders, we have done a buyback that is the biggest and unprecedented again by our side so far. This buyback is also an indicator of our confidence in the future of the company, and that is how we would want our investors and all our stakeholders to appreciate this fact. With those words, I would now like to hand over to Parag Bhise, our CEO.
Thank you so much, Vishnu, and good afternoon, everyone, and thank you very much for joining this call once again. While it continues to be another tough quarter for us, I'm happy to share that we've been able to recruit a large number of freshers, as mentioned in the last investor call, and they are at various stages of onboarding, including many who have started to contribute to our delivery and hence to our top line. Adding on to the initiatives that Vishnu just mentioned, we have taken the following more initiatives in this quarter to strengthen both the security as well as the convenience of nucleides, as we call our associates, by providing them with better work environment. We have completely eliminated BYOD, that is bring your own devices in India. BYOD is the concept where we allowed nucleides to use their own devices, essentially laptops or and it had become mandatory for us when we had to suddenly mobilize our entire workforce to start working from home. We have replaced all such devices with brand new company-owned laptops. The large number of laptops that we have procured are also being distributed to the new joinees, both freshers and laterals. We are also transitioning to MS Teams, Microsoft Teams, one of the best collaboration platforms that you may be aware of for all the nucleites, for use by all the nucleites. This kind of explains the significant investment that reflects in our books, in addition to the increase in personal expenses that we spoke about earlier as well. We are otherwise experiencing good traction from the market, both with our existing as well as our new customers, and we have a sizable work in hand as well as strong pipeline. With the measures mentioned earlier, both in terms of upgrading the skills and knowledge of our associates as well as by providing them with better working environment, we are expecting significant productivity gains to come in the following quarters. Also, considering that the market situation still remains very dynamic in our sector especially, we have taken a decision to advance our next year increments by 3 months to be effective from 1st of January 2022 as against 1st of April 2022 that we would have normally done. Thank you so much once again, and over to you, Swati.
Thank you, sir. Now I request Tapan sir, please put some light on the financial highlights. Over to you, sir.
Thank you, Swati. Am I audible?
Yes, sir.
Swati, am I audible?
Yes, sir, you're audible. Please go ahead.
Yeah. Okay. So key highlights from financials are for revenue. Our consolidated revenue for the quarter is at rupees 121.6 crore against rupees 114.1 crore quarter-on-quarter and rupees 124.1 crore year-on-year. Overall revenue in foreign currency, including India rupees revenue, is $15.3 million for the quarter against $15.5 million quarter-on-quarter and $16.8 million year-on-year. Product revenue for the quarter is at rupees 99 crore against 93.2 crore quarter-on-quarter and rupees 103.2 crore year. Revenue from projects and services for the quarter is at rupees 22.6 crore against rupees 20.9 crore quarter-on-quarter and rupees 20.8 crore year-on-year. As for expenses, cost of delivery, including cost of product development for the quarter, is 79.5% of revenue against 81.5% of revenue quarter-on-quarter and 67% of revenue year-on-year. In absolute terms, this is rupees 96.7 crore against 93 crore quarter-on-quarter and rupees 83.1 crore year-on-year. Marketing and sales expenses for the quarter is 3.8% of revenue against 3.6% of revenue quarter-on-quarter and 3.3% year-on-year. In absolute terms, this is rupees 4.6 crores against rupees 4.1 crore quarter-on-quarter and rupees 4 crore year-on-year. As for GI expenses for the quarter, it is 12.3% of revenue against 10.8% of revenue quarter-on-quarter and 8.7% year-on-year. In absolute terms, this is rupees 14.9 crore against rupees 12.4 crore quarter-on-quarter and rupees 10.8 crore year-on-year. EBITDA for the quarter is at rupees 5.4 crore against rupees 4.7 crore quarter-on-quarter and rupees 26.1 crore year-on-year. Other income from investments and deposits is at rupees 7.1 crore.
Tapan sir, can you hear us? Are you there, sir? You're not audible.
Swati, I can see his line, but not audible. Tapan sir, I request you if you can please disconnect and dial in again.
Swati, let me call in on another number.
Okay.
Hello.
Yes, sir.
Hello. Suddenly my line got disconnected. Okay.
Go ahead, sir, please.
Total
Now you're
comprehensive income. Total comprehensive income, which includes net profit and other comprehensive income, is at rupees 7.6 crore for the quarter, against 7.1 crore quarter-on-quarter and rupees 26.3 crore year-on-year. EPS for the quarter is at rupees 2.77 as against rupees 2.95 in the previous quarter and rupees 8.55 in December 31st quarter. In terms of foreign currency hedges, on 31st December 2021, we had $4.7 million of forward contracts at an average rate of 76.12. There is a mark-to-market gain of rupees 41.40 lakhs, which is taken to hedging reserve in the balance sheet. Revenue contribution from the top 5 clients for the quarter is 23%, which is same as previous quarter. The order book position is rupees 563.8 crore, including 541.4 crore of product business and rupees 22.4 crore of project and services business. In September 30th, 2021, the order book position was rupees 546.8 crore, including rupees 514.8 crore of product business and rupees 32 crore of project and services business. Total cash and cash equivalent as on December 31st, 2021 are rupees 543.3 crore against 724.5 crore as on September 30th, 2021. This includes balances in current accounts of rupees 32.4 crore, various schemes of mutual funds rupees 377.1 crore, fixed deposits of rupees 29.9 crore, investments in tax-free bonds of rupees 98.6 crore and rupees 5.3 crores in preference shares. With regards to receivables, we are at rupees 83.4 crore against 77.7 crore previous quarter. During the quarter, there is a gross addition of fixed assets of rupees 16 crores, consisting primarily of rupees 10.5 crore on computers and rupees 5.5 crore on software. Now I'll hand it over to Swati.
Thank you, sir. Sorry for the inconvenience caused. With this, we are now open for our Q&A session. I will now hand it over to Harpreet. Over to you, Harpreet.
Thank you, Swati. With this, we will open the floor for Q&A interactive session. So I request you, if you wish to ask a question, please press 0 and then 1 on your telephone keypad. I'll repeat, to ask a question, you need to press 0 and then 1. First question of the day we have from Vaibhav from Honesty and Integrity. Your line is unmuted. Please go ahead.
Yeah, hi sir. Thanks for providing the opportunity. So I just have first two questions actually. So on the buyback, I think congratulations that was a good move. But going forward now, given the promoters are already close to 75% of the stake, we need a radical rethink on the capital allocation. In the sense that whatever problems we are currently going through, I'm sure you will overcome that. and after that there is no window for buyback unless and until promoters start tendering their shares. So, can we expect dividend payout ratio to be substantially higher going forward when things return to normal?
These decisions pertaining to dividend payouts and buybacks, these are taken by the board considering various factors, both short-term and long-term, keeping various factors, both short-term and long-term, at the back of mind. And appropriately, when the board would take the decisions, I don't think we will be able to commit anything in this call about this matter. And I would rather want to understand, in fact, from you, you talked about radical rating on capital allocation. What exactly is meant by that?
Capital allocation, I mean to say how the whatever cash that we generate, how that cash is utilized in terms of what is retained in the business and what is distributed to shareholders. Right. So, but the more and more cash we retain in the company, that gets reinvested into low earning investments like debt mutual fund and all of those things, versus the distribution to the shareholders. So that's what I meant by capital allocation.
Fair. So we would the board would be keeping all these factors in mind when these decisions are taken in future. Correct.
And lastly, on the PASE platform, so good thing that RBI has approved our product under regulatory sandbox, and now probably we'll see some more action. So just wanted to understand where is the potential lies for PASE and what would be the revenue model. Because at the time when we launched it, we said that there will be potential on the payments bank, on the e-commerce side, but I think most of that has already been now captured by Google Pay and Paytm and likes of the world. So I think what is the remaining place where PASE can be relevant, and what would be the revenue model that can be there?
Yeah, the very excellent question. The places where PASE continues to be relevant is where people do not have a smartphone, and that population is quite huge. I think at least there will be anywhere between 200 to 300 million adults who do not have a smartphone. So that is the target segment, which is still relevant. However, we continue to face challenges in terms of acceptance by the relevant government agencies, and we continue to focus on how do we get them to appreciate the value of this very, very unique offering. And we'll come back to you with the latest in next quarter.
Okay. Okay, that's it from my side. I will come back in the session.
Thank you. Thank you so much.
Next, we have Ranesh from Investor First Advisors. Your line is unmuted.
Hello. Yes, sir. Hi. Thank you, and congratulations on a well-executed buyback. Just a couple of questions, sir, from my end. Number one is that, sir, I was going through the results, and our operating and other expenses are up year over year from, let's say, 15 crores to about 21 crores, even on a QOQ basis. I think in one of the comments you mentioned that essentially it was on account of G&A because the sales and marketing was not up that much. So in the G&A, sir, which part of it, has it expanded? Is it something that's going to continue on a continuing basis at this pace, or is it just a one-off thing? That's one of my questions. Then I'll come with a few more, sir.
Yeah. So thanks for appreciating the buyback. Now, as far as this increase is concerned, mostly it is because of the depreciation that has gone up thanks to the purchase of hardware and software. So this is going to last for quarters to come.
This will last. as this is what, like a license fee or what? What have we paid here?
See, as I mentioned, this is both depreciation as well as license fee, combination of the two.
Okay, sir. So do you think it will continue at this pace, or do you think it will go on increasing also?
As of now, it should continue at this pace, unless we acquire some very high level, hardware, etc. Which there is a possibility, but as of now, I would say it will continue at this pace.
Okay. So basically, our G&A we can assume will continue at 16 crores roughly.
Yeah.
Okay, sir. And sir, in terms of the employee cost, I know that we've had quite a time, and we've successfully added a lot more freshers. So do you think, sir, on the employee cost front, we are past the troublesome times at least, and now we are into the steady state period? Or do you still think that we still have some ways to go?
I'll request our Chief People Officer Prema to take this on.
Yes, sir.
Yeah, sure. Thank you, Vishnu. So the trend that you've seen in the past year and more than a year actually, whatever we are reading in the market, it appears like the trend is likely to continue for anywhere between 12 to 18 months. So it's something that the entire industry is seeing, and definitely it's not unique to our organization. And so we are just preparing for that. With the induction of freshers, we do see that we will be able to manage on the cost front and hiring related costs that one would normally incur. So yeah, the trend we do see is likely to continue for 12 to 18 months.
Got it. And just one question from my end again on another point. If you see a segmental result, there seems to be, in Southeast Asia, sir, we seem to be, both losing revenue momentum as well as, there's a PBT loss, a segment loss. So just to understand again, is it a one-off, or was it some project roll-off, and that's why our fixed costs have come out here, or what is the situation there, sir, in Southeast Asia?
I'll request Anurag to take this question.
Hi, good afternoon. Can you repeat your question, please?
Anurag, hi. So essentially, no worries, yeah. So Anurag, essentially, if you were to see, the segmental reporting that's there, we did about 24 crores of revenue with a segmental EBIT of about negative 78 lakhs in December 2020. And December 2021, that's moved to about 2.5 crores segmental loss. And there's been a degrowth even in the revenue as well, from 24 to 21 crores. So is there something to read through in that, in the sense that some projects are rolling over and that's why our fixed cost is now, coming out? Or do you think this is a temporary thing, or is there something that's happening in Southeast Asia?
So first of all, Victor, the inconvenience that you have to repeat the question.
Don't worry.
Slight disturbance at my end. Yeah. So first of all, it's actually a very though it has lasted for a few quarters, but it's a very, very temporary situation, I will still say. The reasons are again related to the overall industry situation, that we have a good number of projects and business pipeline in our hands. Having said that, as the immigrations for Singapore have been closed for almost 18 months now, the talent paucity has increased here, and we are not able to execute all the projects to the extent we wanted them to be executed. In addition to that, there is a significant increase in the personal cost here. You can imagine it's an island which is closed from everywhere. So the talent scarcity has increased, and that has increased our personal cost and led to this type of change in the financials. But we are expecting a few innovative methods to increase our revenue. And at the same time, once the borders are open, we will be easily getting the talent as we used to get in the past, and this situation will be surely reversed.
Understood. Got on. And last question from my end is similar situation in the Middle East, because Middle East also 8 crore has come down to about 2 crore. So is that also because of the closed borders?
To large extent, yes. And the personal cost, personal cost has increased. That phenomenon is omnipresent. So that has caused everywhere. And Middle East was also closed from the aviation perspective. Recently, it has opened up, and that's why we will be seeing the differences there as well.
Got it. And there should be more projects in Dubai and Saudi and things.
Predominantly in the UAE region, and there are a couple of in the GCC, rest of GCC region. Yes.
Got it. Thank you very much, Anand. Thank you. And just if I may just ask, you had mentioned the total cash on books. I know the signal fell at that time, so you just don't mind repeating the total cash on books. That's all. Thank you very much, and wish you the very best of luck. Thank you.
Next, we have Rishi Modi from Barcala Investment. Your line is unmuted.
Yeah, hi.
Tapan,
Can everyone hear me?
Just a sec. Tapan, you may want to just repeat the cash on books situation as of 31st December.
Sure, sir. Okay. Total cash and cash equivalent as on 31st December 2021 are is 543.3 crores, sir.
Yeah. Okay. Thanks, Tapan, and back to you. Sorry, I had to interrupt.
Yeah, no problem. So I have a few questions. First, on just the numbers front. I think in the past Concalls also, I think people had suggested if we could have a segmental revenue based on on-premises and FinnOne Neo, and similar for FinnAct on-premise and cloud. So do we have those numbers with us right now, or should I reach out offline for those numbers?
No, we don't have those numbers offline, and we may not be able to give you those offline either.
Oh, okay. So just if you could give a brief guidance on how FinnOne, Ninetel, and revenues have grown, like just the Neo, and has grown over the past 3-4 years, and how much of that has been from shifting of on-premises to Neo versus new additions. If you could give a brief overview of that.
Bijesh, would you like to take this, or Parag?
Yeah, I'm okay. Yeah, Bijesh, go ahead.
Yeah, thanks for this question. We will not be able to give the product-wise and the deployment methodology-wise bifurcation. I can only say that it's 15 releases, the 15th one coming out on 1st of February this year.
Sorry to interrupt you here. Is it just me, or is your voice breaking for everyone else?
Yeah, Bijesh is not audible.
Yes, sir,
maybe Parag, you may want to answer.
Okay.
Parag,
So maybe I hope my voice is audible. This is Parag here. Segmental revenue as product-wise, as Vishnu said and Bijesh said, that's not what we'd be able to give. But I would like to, since you talked about last few years, I would like to mention that FinnOne Neo is going strong, both on premise as well as in the SaaS model. We have 50 odd customers on the SaaS model already, and some big names on premise. Some of our existing customers have started to migrate from FinnOne to FinnOne Neo. If that answers, the potential for FinnOne Neo is very promising. That's how we look at it.
Okay, all right. And if you could give me just a couple of numbers before I move on to the qualitative questions. Do we have revenue from repeat clients as a percentage of revenue, or a renewal rate for the clients on a year-on-year basis? Hello.
This number, the precise number, we would make it available offline, and next quarter onwards we'll be talking upfront about it. Our guess is, as of this quarter, it will be in the vicinity of 90 to 95%.
Okay, that's great. That's helpful. Now coming on to the qualitative end of the question, if I could get a brief idea about do we have any products in the pipeline and any new technological capabilities that are being built into the staff or even within the company, like be it blockchain or any other sort of decentralized system that we are building our capabilities on.
Rajesh, would you like to take the question?
Yes, I can take this question. Is my voice clear?
Yes, this is clear.
So, recent developments on the technological front, one is AI/ML. We are investing into AI/ML. We have come out with some solution offering leveraging this capability, and we see more that would be done on this front. Apart from that, if I talk about the business technology, we have come out with a buy now pay later offer, which handles the scale required for the massive lifestyle financing that is happening in these days.
Okay. All right. And one more thing, we were trying to reprice our contracts, even in renewal phase on new contracts with new clients. If we could get an overview of how successful the repricing has been, like how much percentage increase in the contract value on an average has taken place, and are we facing any pushback from the clients, that would be helpful to know.
Thanks for asking this, but this is too specific. I can only say that client-wise appropriate pricing strategy has been worked out to ensure that it is win-win for both client and us. Beyond that, I will not be able to share the specifics.
Okay, understood. All right. This is helpful, and yeah, that's it from my end. Thank you.
Next, we have Vivek from Nine Rivers Capital. Your line is unmuted.
Thank you for the opportunity. We understand from the commentary that you give that, and in the past commentaries that you have made, that you all have given a significant raise to your current employee base and also hired new people who are yet to go online, so to say. We appreciate, that's a forward-looking and a requisite step that you all have taken. What we want to understand is correspondingly, why have we not seen a growth in revenue? Is there still some lingering effect of the ransomware attack that you all had? And I'm asking this question specifically because some of the peers who are listed in this space, they have come out and shown significant top line growth or traction in their revenue profile. So, this is something, is this something that is likely to get corrected in short order, or is this, while we work with elevated cost structure, the top line will take much more, a longer time to, to start showing traction? That is what we wanted to understand.
Clearly, thanks for a very meaningful question. Clearly, the way we would like to respond to this question is there are two approaches that we are following. One is long-term approach, which would take few quarters. It could be a couple of years also. To demonstrate results, and parallelly we are working on the short-term measures. how well do these measures pan out in terms of numbers, etc.? That remains to be seen. This is more of a, I would say, experimental work that is happening. But we are extremely confident that results of these experiments are going to be very, very meaningful for our certainly for our customers and then in turn for other stakeholders as well.
So, sir, when you say these experimentations, what are these experimentations that we are referring to? The delivery, marketing, or how we manage our cost structure, people cost? What exactly are we referring to? If we can be a little more precise, that will be very helpful.
Yeah, these are experiments that we are conducting in across the board, right from concept stage of a product through validation of those ideas into the marketplace, and then converting them into meaningful architecture, design, testing, implementation, the entire life cycle, and making sure that our customers are able to derive value out of the world-class intellectual property that is got created. So it is experimentations across the entire end-to-end value stream.
So if I can just draw upon what you said, and please grant me this request, is it is more from the delivery, product development delivery model, but even and that is futuristic in nature. So there is a cost involved. We understand that, but even otherwise, you all had a good set of products which you all were delivering to the customer. So why aren't we seeing a traction there? Is there something that has come up which is hampering you all from even showing marginal growth, even high single digit growth? Is there some clip somewhere which is holding you all back, and it is kind of confidential, or it has some strategic importance from a business point of view, which you all are not? Well, it's not so much the cost structure, but it's also the top line, the inability to accelerate the top line. That is what we want to understand.
No, it is essentially those setbacks that we got, and that is what in terms of the COVID and ransomware attack and attrition, which is what is holding us back.
So going forward, how are we making this? Because while COVID might be out of the way, attrition is going to last. Ransomware, happened. The last place we would expect the ransomware to happen is the tech company, but all the same, it happened. So are there any lingering effects of the ransomware because of which certain projects are on hold while you have deputed people, the execution is not happening, billing is not happening? Where exactly is the hold up? And again, this is in reference to people have gone through the same the external macro factors and have shown growth. They have had ups and downs and temporary, and we assume that is also temporary in the case of Nucleus. But even in the last 1 year, they have shown growth. So that's where we were trying to understand what exactly is holding back the top line growth.
Yeah. So once again, let me reiterate that when it comes to ransomware attack, no lingering effect whatsoever. In fact, I'll request Anurag to elaborate for your benefit and everyone's benefit how we have emerged much more stronger than a whole lot of players. Yeah, so likewise, we are confident that will bounce back. The top line will bounce back soon enough as our experimentations start becoming more and more successful. Over to you, Anurag, to just give a perspective on how we have grown stronger on cyber security.
Sure, Vishnuji, thank you. See, first of all, when we were hit with the ransomware or cybersecurity breach, we could contain it to a maximum extent. That is one. Second, our you can say recovery was quite faster in comparison to generally what organizations take to recover after these type of attacks. So this is the second thing. After that, we have gone for a very comprehensive assessment. We have engaged unarguably the best cybersecurity consulting firm in the Southeast Asia. They have been our cyber tech advisory, and our internal team and that cyber tech advisory had actually gone for a very comprehensive measures on strengthening our cybersecurity posture. I can tell you that all our digital assets are currently protected with best of the class cybersecurity platforms and tools. We have gone for a different type of multi-factor controls, multi-layer controls in our environment. As a good practice, what we have done precisely to add strength to our cybersecurity, I will not be able to share those details, but I can tell you that one of the top 4 consulting organization, in addition to that, our cyber tech advisory has gone for a detailed discussion with us, assessment, and they have mentioned that right now probably we are among the top 3% IT organizations having the proper cyber guards. So that's the level. And as we had to update our customers about this incident and our recovery, just to add how strong we have become is also evident from the fact that many of our customers have gone for detailed discussions with us what we have done. They have also consulted the same consulting organization and gone for quite a few details exchanges with us to see whether they can also follow the same type of measure and put the same type of controls. So that's the level that for this also we have got multiple appreciations from our customer that what type of guards we have put in after the incident. I hope
that's all from my side. Yeah. Thank you.
Yeah.
Next is Rahul Jain from Dolat Capital. Your line is unmuted.
Yeah, hi. Thanks for the opportunity. Hope my line is audible. Firstly, if you could share the order book data. I think I missed if you shared that in the opening comment. And then I have a follow-up question to ask.
Tapan, can you share this?
Yeah. Am I audible or not?
Yes, you are.
Yes, I can hear you.
You are.
The order book position is at rupees 563.8 crore, including 541.4 crore of product business and rupees 22.4 crore of project and services business. In September 30th, 2021, the order book position was rupees 546.8 crore, including rupees 514.8 crore of product business and 32 crore of project and services business.
Right. Thank you. My second question is, is there any 3 specific things, on the positive side that we can highlight and say that these 3 good development that happened in the business in last 12 odd months? Because because if you look at some of the comments that we shared in this quarter as well, like on the supply side, we said that it's not going to normalize in any time near future. And also from the demand side, we're not able to scale up despite very strong tech spend scenario by the BFSI segment that we are witnessing in case of many Indian services as well as software peers. So anything we want to highlight as a positive thing that has happened?
Raj, would you like to take that? Yeah, I will. But would you, because you made a few observations, could you repeat them? Because some of them I can share the positives which I've done, but then some of the observations if you could repeat, because yeah, that will help.
So okay. So if you want, I can rephrase my question. What I'm essentially trying to understand.
Yeah, that will be better because.
Okay. I'll do that. So on the supply side, we are saying that the supply side is going to be tight for some time. So that is not going to resolve in a hurry. That we all know, right? That is something which every other peers is also talking about. From a demand side, what we have delivered in the last couple of quarters is also not very exciting, which is different from what others are experiencing, where we are seeing one of the best growth for many of your peers, and that peers, I'm counting even the product peers as well as services peers. So I'm saying the demand does not look like good for us. Supply side, we are going to see challenges. So what in this kind of a situation, what are the three big positives that you can highlight is happening in the business?
Okay. So I'll respond with a perspective. Look, I'll kind of repeat what I shared in my opening remarks. That the good thing is we are able to hire a good number of freshers from the market. That's a positive, and it's in hundreds. It's not just a few numbers. They are in different stage of onboarding, including some who have already been deployed on projects, on our implementation and projects, and starting to contribute to our top line. Yes, if you're talking about supply side in terms of manpower being available, that's going to be continues to be a challenge. However, to be frank, lateral hiring we have been facing challenge. However, fresher hiring, there is a very good traction. Now, as regards deliveries, you talked about revenue growth also. So I mentioned in my initial comments that we have good tractions both with our existing customers as well as the pipeline. The challenge remains execution, and the primary reason, I agree that as Vishnu sir answered, that ransomware was kind of one-time phenomenon. COVID also one time or couple of times. These are but what is having a lasting impact is the severe attrition that we faced. Now, while we have hired so many people from in the fresh domain, you would appreciate, and especially in the product domain, it takes longer for us to get those people to understand our products and then start to deliver as compared to what we would do in a normal services situation or in a project situation. So while we got those people, it will take us some time for them to deliver. There is no dearth of work, and that's why I talked about both work in hand as well as good traction from the pipeline, which I am meaning the new orders. Okay. Now, some of the experimentation that Vishnu sir talked about is, just to give you some quick examples, we've hired these freshers from market. It takes us a few months to train them. The experiments we are trying is how can we make them productive in lesser time. So that's one simple example. Those are the things which we are, because they need to, they come with some technology background, but we have a program where we bring them up on the technology front, and more challenging is we bring them up on the product front. So we are trying to see how that can be reduced. So the positives are we got good traction from on the fresher hiring. we're getting good traction from our existing. A lot of our customers are wanting to migrate to a newer platform. Execution, yes, it is a challenge at the moment, but with the fresher hiring that we have done and with the productivity gain, the tools and the platform that we talked about. I talked about the MS Teams. I talked about huge number of new laptops that have been hired and given to people, and the process improvement and the training that we are doing. We expect that to give us benefits in the coming quarter. I'm not sure if I'm able to answer you, not be directly to your precise question, but I wanted to give you a perspective of how the business is looking to us. So we are quite hopeful and upbeat about it. The kind of the situation is not. I don't know if you meant that, but it's not such a. I can't comment about other competitors, how they are doing. We don't know their business model, how they go about it. The other aspect which we touched in the very beginning of as a response to one of the questions is we are also working on our pricing, which Rajesh also kind of answered. It's early, but then that is an area of focus which we are working on because our customers do realize that the costs have increased. More than the cost, we also are getting into value discussions with them. We tell them what value is our product giving to them, how is their business benefiting from our products, which is something which we were probably not doing so extensively in the past. So these are the kind of initiate and experiment that we are trying. I hope I'm able to answer your question in a larger perspective.
See, I understand and appreciate your detailed thoughts on it. But what essentially we are seeing as an outcome is that in FY22 we are going to close our revenue which we did in FY19. And incidentally, this is the same period where most of the companies are talking of a common word, which is the most commonly used word, which you might have also come across, is digital acceleration. And I don't see that acceleration we being beneficiary of it. In fact, looking at the number and not spending any energy on understanding your business, people would say that probably we are a very traditional business and that's why we are getting disrupted in such a scenario. While I know and I've spoken to your clients, they speak very highly about your product, but somehow the kind of product that we are having and the kind of numbers which we are delivering does not look like that people at the helm are doing the right justice. Maybe it's much easier said than the situation on the ground. I understand hyperinflation and hyper-accretion is a real worry which every company in your industry is facing right now and also in many other industries. If that is your biggest concern, because you have, as you said, there's no dearth of work, right? So you have the right positioning for your product, you have demand for that kind of product, but you're not able to deliver. If the issue is completely on the supply side, not on the demand side, then why we are not able to take some very, very aggressive step? Because it's not 1 quarter or 2 quarters, it's been 2 years, and we are getting into a third year where we are not possibly will not grow. So is there something that somewhere we need to do a introspection into and come out to be? And maybe you already have seen those early signs, as you rightly said, that some of the things have started falling in place. So can we say that the FY23 is going to be a very good growth year because some of these challenges will be behind us? Can we give that kind of comfort? If not, we see any challenge in the current situation that way?
I would say we hope to, but as Swati mentioned in the beginning, we don't give any predictions. So I will not talk about it. Of course, I'll only say that the kind of things that we are working on, the basics in terms of getting good, intelligent, fresh people from the institutes, working on infrastructure, our product is anyway strong, and you kind of validated that. You also considered one of our customers. You could consult more customers. And on the technology front, look, we come out with product releases every 6 months. And while there is a functional component to it, in the current circumstances, well, there's a very strong technology component to it. So product releases are not only functionally enriched, but they're also technologically enriched. And we talked briefly about the AI ML, which are subtly getting into our products. So saying that, maybe you made that statement that saying that the product is very traditional and not up to speed on technology is probably not fair, because you would know, we talked about it earlier, this new product that we created has been completely re-architected, which probably no one or very few would take such a big risk. We completely rewrote this product because we wanted to always remain on the latest technology, and this is what. So I would, in summary, I would respond that probably some more patience is required. We are very sure of what we are doing, and unless the market dynamics again change very unfavorably, we should be making good progress. That's what I would like to conclude.
Yeah, I completely agree. Just one last point I would like to say. I have heard only good things about your products. There is no question about it. But if in the same market we say that our product is superior to others, but probably the companies with lesser superior products or inferior products for that matter on a relative scale are delivering better numbers than ours, then there is something wrong between having a good product and having a good market. So that is something, as you said, you cannot comment on others' performance, but I think you need to look into what others are delivering. They are delivering their best ever numbers in these years, but on the contrary, we are seeing the worst performance in last 5-6 years happening right now with us, so which is very conflicting with what is happening in the marketplace. So that is something which I wanted to highlight your attention to. Thank you. That's it from my side.
Yeah, thank you. Thanks for those inputs. We'll anyway reflecting upon these things, we will keep your inputs in mind. Thank you so much for these critical inputs.
We have one last question of the day from Vaibhav Barjakia from Honesty and Integrity Investment. Over to you.
Yeah, thanks for providing follow-up. Just want a few numbers. So what is the number of employees in this December 21 quarter ending and December 20 quarter ending?
Bhima, could you take it? Bhima, hello.
Yeah.
Yeah, we are having a headcount of 1,689 as of 31st December 2021, and we were having 1,998 as at 31st December 2020.
Okay. And lastly, on the I understand the pressure that we are seeing on the employee cost front, and you also highlighted that you upfronted the increments from Jan. So it's obvious that the employee cost will keep increasing. But apart from the employee cost, do you see any other place where costs can be managed or reduced? If you can highlight which are those areas where we can probably reduce costs so to offset some of the margin impact that is coming from the employee cost.
Okay, we are trying the productivity measures, and that is how we can hope to reduce the costs otherwise, percentage terms wise, but otherwise, as the industry is experiencing, it's a very tough situation as of now.
Got it. Understand. That's it from my side. Thank you.
Thank you.
With this, I would like to now hand over the floor back to Swati for final remarks. Over to you, Swati.
Thanks, Harpreet. Now we would like to thank all our investors for joining us today for this call. I would now pass it over to Vishnu sir for his closing comment. Over to you, sir.
I'd like to take this opportunity to thank all of you for your continued interest in Nucleus Software, and would like to reiterate our commitment to ensure that we deliver value on a long term to all our stakeholders. Thank you so much.
Thank you so much. Thank you so much, all the speakers and investors, for joining the call. That does conclude our conference call for today. You may all disconnect now. Thank you and have a pleasant day.